everyone to the 2023 and beyond RANSWIS webinar, where we give our we answer 25 questions and give our predictions for what we're going to go through this year. Yeah, I'm just waiting for everyone to jump on the call. Obviously, I've got the governor with me. We're going to kind of, it's quite an informal presentation. But it's one that you guys enjoy. I think there's probably a lot of return visitors from last year because we're going to hand out some prizes as well, which are down there somewhere. But yeah, thank you for joining us. So let's get started. Before we start, who are we? If you don't know us, so we run RANSWIS. It's a stockbroking company. We do online trading, private broking. We have managed portfolios where we trade on your behalf. We also, Viv does a lot of structured products, which are kind of capital protected credit notes. We do offshore transfers. We've got a little tax-free savings business, and then we've got Jaco, who's our CFP, who does a whole lot of wealth management. Yeah, so quite a well-rounded financial service offering. Yeah, so we obviously have multiple partners. You know, we're sitting in the JSE building at the moment with the light shining through the side windows here. But we've partnered with all the big banks. We've got great offshore connections, you know, that help us service clients by delivering really superior financial products. So what are we chatting about today? So the first step is we're going to just review last year. We're going to look at our 25 predictions for last year and decide what did we get right, what did we get wrong. Obviously, we asked the audience to participate as well. So, you know, last year I think we did it on January 12th. A whole lot of our clients, you know, put in their survey numbers. They made their predictions on the big questions that we were asking, and we've got their scores, and we're going to see how everyone did. Then we're going to go through the 25 big questions for 2023. You know, everything from economies to commodity markets to, you know, some bonus black swan questions. We're going to try and answer them, and then you guys are obviously going to have a chance to participate as well. Finally, we're going to look at some practical application. Once we've built our thesis about what's going to happen in 2023, how do you apply that? What should you be doing? What action should you be taking? And finally, at the end, we're going to announce the prize giving. So we'll give away the prizes for the best predictors of 2022 and see how they did. Then finally, we'll do Q&A. Normally, we stay on as long as people ask questions. Yeah, we're going to try and keep it to an hour, but if it goes over an hour, we don't really mind. We just stay here and try and help you as much as possible. If you do have questions during the presentation, please feel free to hit us up in the chat window. There's also a Q&A segment. If it's something that you want to discuss, the nice thing about webinars is they can be interactive. So if we see really interesting questions, we'll try and answer them live as well. But yeah, that's going to be the format of the event this evening. Now, okay, so first step, year in review, what we got right, what we got wrong. So the first thing we got right, and we're about to get to the questions now, is the first thing we got right was we actually did a good job for our clients. So last year, in September, we were ranked as the overall best securities broker in South Africa, topping, you know, a lot of the big banks, big listed company firms. And I think what really stood out for me as well was that Werner Fourie and Christo Kroch both got ranked they were both ranked as individual broker categories. So guys on the desk, I'm really proud of them. That makes us the top stock broker in South Africa for 3 out of the last 4 years. So that was one thing we did right in a very tough year. In a year where markets are falling, I feel like our service, obviously our client base is still very happy, which means that our compass is correctly calibrated in my mind. If our clients are happy, it means that we're doing things the right way for our clients.
So just get so you can see the whole screen.
Okay, sure. Yeah, so then, okay, so that just adds to the balance of the awards. Like I said, we've won a whole lot of awards over the last couple of years. This, you know, kind of the top securities broker. We actually also won the top self-service broker, which is kind of the online systems that we give our trading clients. And yeah, and that kind of adds to basically the TFSA awards, the People's Choice Awards that we won in the years before. So how did we do? So these are the questions from 2022 that we had to answer. And I think the first point that we need to make is that these are difficult questions. These are not binary questions. These are not 50-50. It's like, oh, it's going to happen or it's not going to happen. It's not, you know, like, you know, getting half right just doesn't mean you were guessing. And some of these questions were very difficult. I'm going to point you to question 2024, at least 24 specifically, which is, will Russia invade the Ukraine, which we said yes. now, this was before the Ukrainian war. So just remember that. I mean, I looked at the audience prediction. Not many guys were saying that. We went out on a limb. Often we do go out on a limb on these questions. We try and make them quite difficult. So the numbers that we're picking when we say, hey, will US CPI be between 4.5%? We put a lot of thought into that to try and make that inflection point quite tricky. It normally is kind of like a bit of a touch and go answer. So don't judge us too harshly on the wrong answers, but and some of them are also borderline because as Werner was the one that went and watched the old presentation to kind of score us and just see, make sure that all the answers that we're giving on our scoring sheet is correct. And a lot of times he's like, but Gary, I don't actually know whether Viv said it was a yes or a no, because Viv's going to give his opinion on, maybe this could happen, maybe that could happen. But today we're going to nail them down to solid yes or no answers so that we can make the scoring easier. But we did try this last year as well. But economists notorious two hands will give both sides of a problem. It's more about the thinking behind it. But COVID the first question was, will COVID restrictions end this year? So this was a borderline one as well, because in South Africa they did end, but in the presentation we were talking more about international regulations. Obviously China on the 8th of January ended all their COVID restrictions. So again, it was very touch and go, but I kind of said that no, all COVID restrictions didn't come to an end. I mean, obviously there are still restrictions in the Eurozone to an extent, but the big economies like China, US, even South Africa, we're not sitting here with masks this year, which is so nice. So we're saying no, COVID restrictions haven't ended in this year, as in 2022, because China still had restrictions in place, even if they were lifting. So that was marked yes. Will US inflation move below 4.5%? As you guys know, inflation has been persistently high this year. We said no, it wouldn't. That was also a correct answer. Will the Eurozone GDP growth rate beat the US growth rates? We said yes, that has actually been the case. I mean, there's all sorts of different ways of measuring it. This is also one of those difficult, more borderline questions because we don't actually have the official figures yet up until the end of the calendar year, but we're basing this on predictions. We're basing this on as much data as we can get and kind of, just extrapolating slightly to get it to the right place. The same with South African GDP growth. Was it above 2.5% this year? It doesn't look like it is, but like I said, we're still waiting for that exact calendar year, but more or less not. So we've kind of done the scoring sheet as a no. Most of these are the more borderline questions at the beginning. Will the SA unemployment rate drop below 35%? I think we said at that stage, we would have loved to be proven wrong on this one. And I'm happy that we were. So South African unemployment now below 33%. We actually have seen an improvement. But do you know why we saw an improvement this year?
I think basically we are adjusting to what's happening with the market. So with the situation, the infrastructure, energy, and so on in this country. One of my theses is the fact that everyone's getting solar. Everyone's getting their own power generation right now. And the fact that we are able to still have the country grow in the last little bit, despite the fact we're seeing level 6, level 4 load shedding virtually all the time, is I think an indication of that.
Okay, yeah. So yeah, same. Okay. So good news, very good news for South Africa. And I think South Africa has largely performed a lot better than people have expected in 2022. There's no question about that. If you look at market performance as well, yes, we saw a little bit of a recovery in China. If you guys attended the last presentation, you remember my big call for the year was, I think we're going to see a Chinese recovery. And early is the same as wrong, and I was a little bit early on it. But the second half of this year, we've seen Chinese PBOC authorities saying they're going to wind back some of those tech regulations. That's lit a fire under the likes of Tencent, which has obviously boosted the likes of Naspers and Richemont, which is so reliant on those Chinese tourists. So we have seen, I suppose, a very positive South African market based on some of the types of companies that are listed on our exchange. And I mean, we were hitting all-time highs yesterday on the South African market, which it really doesn't feel that way if you've been exposed to financial markets in 2022. Certainly that is a very odd feeling. And of course, if you then rebase back to dollars and you look at the currency depreciation over the last year, it's not as good a news if you're measuring in dollars. But yeah, hey, we'll take the wins where we can get them. So happy South African unemployment is falling. Still think there's big structural issues though. With the MSCI World earnings exceed 10%, we've said yes. Again, difficult to measure that because MSCI is very difficult with their data. So we've had to do kind of a composite calculation based on a huge degree of underlying stocks. But yes, we've said that the earnings growth did exceed. Will the Turkish lira recover below 12? So here we got this one wrong. Remember Turkey, Viv will chat to you about Turkish economic policy, but it's absolutely nuts. And we obviously saw the lira blowing out, and we were thinking, could there be a correction? I mean, do you remember the thinking behind why we were looking for this to come down?
Basically, what's happened in Turkey is that Erdogan has his own particular policy, his own almost economic system of thought. He believes if you have inflation, you cut interest rates because interest rates are a cost, and therefore lower interest rates means lower costs, and therefore lower inflation. That's kind of his idea. So you want to stop inflation. What you do is you lower interest rates, and that's going to stop inflation. Obviously, that does not work. The other thing it does is that it makes people that want to put money into the country quite nervous because they see this high inflation, but they see a very low interest rate relative to it, and therefore they think that any money in that country is going to depreciate over time. So they have that a lot of flight of currency from the Turkish lira. To give you an idea how much of a move this has been, it's currently around about 18, 19 lira to the dollar. That's basically from a point of about 3 in 2015. So it's weakened by over 600% in the last, say, 7 years, 8 years. It's a dramatic, weakening. Last year, we missed at 12. We were expecting a reasonable recovery, but it's weakened more significantly than even we thought then.
Okay. So then also USD ZAR finish. So remember, I try and make these. So we've got another USD ZAR prediction in today. We always try and make these difficult. So we take kind of the point that we see the currency trading at. We take the differential between the dollar-based interest rates and South African-based interest rates, and we add that and we make that the inflection point. That's why we picked 16 as our potential level. I think we've picked 1778 this year. So it's trying to make this difficult. We knew we kind of figured it was going to weaken, but we were like, is it going to weaken more by the interest differential? That was going to be the question for us. So we actually said no. I think we had a big debate on this. Currency predictions are always very, very difficult. We had a big debate. I think I actually said on business day that I kind of switched our call and said, no, actually, we think it's going to weaken. But in the presentation, we said no, so it's no. So we got that one wrong, unfortunately. So we have got a much weaker currency. We got a little bit of a strengthening into the end of the year, but not as much as is typical. Seasonally, the rand is usually very, very strong in this period of the year. But I think with all the load shedding and I suppose you guys know the politics as well. I mean, we had the Eskom CEO was poisoned. I mean, Andre de Ruyter was poisoned. I mean, we've got allegedly we've got real problems in South Africa, and I think that has made it potentially a little bit weaker than we were hoping. But yeah, so that one we also got wrong. Will the Fed hike rates more than 3 times in 2022? We said yes. Correct. Yeah. Got our interest rate call right on the US interest rates. I can't remember why we only thought 2%. I think at this stage, I mean, if I cast my mind back a year, I mean, this was pre-Ukraine war. It was kind of, we were coming out of COVID. Things were starting to get better. We had supply chain issues. The world was starting to settle. And I think we thought, yeah, South Africa, we're benefiting maybe from slightly higher commodity prices. Maybe we'll get, we maybe not going to get, 75 basis point increases. We might get 3 or 4, 5, 25s, or maybe a couple of 50s. But, to go the quantum over 2%, we thought maybe not. Obviously, the interest rate hikes have been a little bit more aggressive than we thought. I think that's fair to say.
Also, you must understand that the 2% was like the even kind of split for us. Like, this was a point at which it becomes difficult to say, it's lower or higher. And so we said less than 2% here. We were thinking that 2% was, a reasonably borderline level. This was ahead of the war. We didn't factor in, even though we predicted the war, we factored in the implications of the war totally. We also didn't quite factor in just how much inflation there'd be in the US. We thought it'd be high, but we didn't think as high as it could get to. And that's one of the reasons we said 2%.
Yeah, and I also think the aggression is, so there's definitely been a mentality between among central banks to front load these interest rates as well, hike quickly and aggressively, and then pause, which is kind of, I think, where we feel we're at the moment, where we're gradually slowing. I mean, I think we're expecting a 25 basis point increase from the Fed on the 1st of February. So we're definitely seeing a moderation in the pace of the increases, but it was a very, I mean, if you look at interest rate hikes on a curve compared to any historical interest rate hiking cycle, far, far steeper. So I think that's maybe why also we were a little bit, but we got it wrong. We said, no, that's fine. Will the gold price finish above 2,000? People were saying, hey, we need to word these questions better earlier. So gold price did actually spike through 2,000, but it didn't finish above 2,000. We actually have the gold price going up. I think, you know, my base case is that if we see interest rates starting to fall, but we're still in a higher inflationary environment, we're going to talk about that in a little bit. I still think gold will be supported, but yep, didn't maintain above $2,000 an ounce. So we got that one wrong as well.
Point on that, when we picked it, it was much below 2,000.
Yeah.
So when we said, okay, will it go above 2,000? That was quite.
Will it finish above 2,000? Yeah.
So we were saying basically in the next like 2 months or 3 months after the time we picked it, it was a very quick increase in the price. So
sure.
It looked very good for about 3 months.
For about 3 months, and then it all fell apart as the dollar just took precedence of everything. Now, will Bitcoin break 100,000 was the question. So if you cast your mind back again, remember it's easy. Hindsight is 2020. Moving into 2022, we were sitting in a world where Bitcoin was what, $45,000, and everyone was talking about this as the new currency. And I think it was, I mean, Bitcoin was the, you know, it was everything at that stage. I mean, we had people coming to us with Bitcoin. It was crazy money, like that they were in Bitcoin. And I think the question that we wanted to ask, but it wasn't this binary yes, no question, was, will Bitcoin break 100,000 or 10,000 by the end of the year? And it looks like it was almost closer to 10,000. So we said, no, we don't think it's going to break. I think it was at 45, and it just come down from about 60 in December. 60 maybe in end of November. We said, will it break 100,000? We said, no. Correct call on that one. Will platinum end above 1,200? We said no, got that one too. Will Brent crude break $100 a barrel? I think that one, I can't remember where Brent crude was at the beginning of the year, but again, that one we said yes, we got that call right. And this was not, I mean, it's easy to sit here and think like, oh, yeah, of course it was going to break $100 a barrel. Well, at that stage, we didn't have a Ukrainian war. You know, like it was a little bit more difficult to predict, but yeah, happily got that one right. Will the all-share index finish above 85,000? We said no, got that one too. Will the S&P finish above 52,000? So you can see last year we were more bearish on financial market outlooks. Pricing outlook was bad. Although we were maybe a little bit more optimistic on economic growth, and that's going to be important later in the presentation. Will the Eurostoxx 50 will the Eurostoxx 50 finish above 4,700? We said no, that's correct. China, like I said, I was very optimistic on China last year, and I was early, and early is wrong. But will the FTSE China 50 index be above 17,500? We said yes, that was incorrect. Will the NASDAQ outperform the S&P 500? At that stage, no. I think we were very much talking the value over growth story. We were saying that, you know, with rising interest rates, this is going to put pressure on some of the tech stocks. I mean, remember, I was down weighting NVIDIA in our managed portfolio, and I was getting basically tomatoes thrown at me by clients saying, what are you doing? This thing's going to the moon. We got little rocket symbols. But yeah, our base case at that stage was you've got to downweight into the, downweight some of the very aggressive tech exposure. I think that was our call. It was the right call for the year. We're going to look at that call again this year. Okay, will the Democrats lose Congress? Yes. This is Viv's world. Yes, got it. Will the Democrats lose the Senate? Yes.
Yes. Everyone thought yes until they
So it's definitely based. Okay. Will Boris Johnson be prime minister? We said no. And he's not prime minister. And I think anyone who watched the news over the last year will know
this was 6 months in advance. Remember
the drama around the British PM's exit. Will China invade Taiwan? At this stage, I mean, when Viv came up with this, like, yeah, we've got to put will China invade Taiwan into the questions. I was like, they're going to invade Taiwan? What? Like, I don't know. It wasn't even on my radar at that stage. And suddenly, I mean, I remember, I mean, there was a lot of saber rattling this year as well. It's after the Ukrainian invasion, that became a real threat. And I mean, again, that suddenly became headlines long before. Okay. We should refer to
Congress.
Yeah, sure. Good point. Thank you for the.
But it's like the way they normally refer Senator Congress. They just normally refer to Senator Congress of those things.
Will Russia invade Ukraine? We've already talked about that. We picked yes. Will China face a full-blown debt crisis? We said no. And this also, like for me, it's always borderline. Like, what is a full-blown debt crisis? And I've got to say to them, like, we're going to nail this down this year. Like, what determines whether it's a full-blown debt crisis or not? I mean, we saw riots in the streets of China this year. We definitely saw issues within the Chinese debt market. There's no question about that, but China's, I kind of
the market still functions.
The market is still functioning. Yeah, like I do take first point. Like, it is obvious when there's a full-blown debt crisis, it becomes obvious. But I kind of this year I want to make it like quite binary. Yeah, but I mean, I think no one will disagree that China is not in the midst of a full-blown debt crisis at the moment, but the debt is certainly still a concern. So we scored 18 out of 25. Okay, so now how did we do compared to the audience? Okay, so we actually did very, very well. This is kind of 2020, 2021, 2022. You can see how the scores have changed. We always kind of try and be very honest about this stuff. So this year, we've actually done really well compared to the audience. Like I said, I think it was a very difficult year from an economic and specifically macroeconomic forecasting point of view. There were a lot of curveballs being thrown at the market. Remember, Russia, Ukraine, China, these were all black swan questions last year, and we were kind of like, we've had a number of them become very, very front of mind. So this year was particularly different. Our audience only got 49%. Now the audience usually does significantly better. We had quite a large sample size last year as well. The top forecaster this year got 66%. We got 72. So the top forecaster got 17 out of 25. So very happy that last year we finally earned our money in terms of predictions. In that, we did beat, there wasn't a single audience member that filled in the survey that actually beat our prediction score, which is the first year that has ever happened. So I'm sure it won't happen next year. So, I mean, last year was the year to listen to us. This year, we'll see. We'll see. Okay, so that's kind of how we did compared to the audience. And on to the questions for this year. Okay, so this is where we start finding out what's happening in the market. Okay, so these are our three big questions for this year. So these are questions I think that are going to determine the direction of financial markets and really the globe over the next year. So first question, Viv, will the US go into recession?
Yeah, just to make sure, this is the questions that we think South African investors should look at. Like, for instance, load shedding. Who cares about load shedding elsewhere in the world? Will we go into recession? Our model for the year is that yes, we will. We will also see an increase in unemployment in the US as well. And I think that would prompt this is the story we're going to be like building off of. So it's not going to be, we choose each one individually. We have a model and then we ask questions about that model. So will they go into recession? I think it's more likely than not that they will have a recession in 2023. So the answer is yes for this.
Okay. And I've made Viv write down all the answers beforehand. So he says yes. So for next year's forecaster, so that's definitely a yes. Okay, so will the US? So just also like the US is weird around how they determine a recession. The rest of the world, if you get 2 quarters of negative growth, it becomes a technical recession. But in the US, you have to have the Bureau of Economic Research has to come out and say this is a recession, and they've got all these other criteria that the rest of the world don't use. So one of the things that I think is crucial to determine whether the US is in recession, one, they will announce it, but two, it's just a weakening of the labor market. You have to see a weakening of the US labor market. Okay, so question 2: will there be stage 8 load shedding in South Africa?
The answer is likely yes, unfortunately. Remember, we had level 6 today, and what's happening today? Basically nothing. It's the second week of the year. We still haven't gotten back to full, growth. I think a lot of the businesses out there are just having the people come back to work in the last little while. And we had level 6. One bad, rain event that caused the coal to get wet, one boiler explosion, one whatever, especially during wintertime, is very likely to push us to level 8. So yeah, unfortunately, I think stage 8 this year is going to be a possibility, maybe a probability. And a thing to note is that, level 6 is like a common thing right now. But until last year, level 6 was very rare. Now it's just something that comes up or whatever. Like today, the announcement of level 6 was like a nothing. But previous to that, the first time they announced level 6 last year, the currency weakened. So yes, I think level 8 is going to be the next thing. And I think it's probably going to happen this year.
Yeah, so we've got a yes on level 8. I mean, do you think we're going to go through? I mean, I've heard chatter from people in the corridors. You know how it is, that there's that the total grid shutdown is imminent. I mean, this isn't a question that we have in the presentation. We're not measuring this question. But what did you say? You think we're going to see a total shutdown of the grid at some point in the next year?
It's not something that, this is something where the possibility, not even the probability, the possibility of it happening is enough to be worried about it. I don't think it's a probability. I think they will basically like go to level 8 and so on to reduce demand to cause the grid to stay up. But the possibility of a shutdown is there. And if it does occur, understand what it would mean to you. We're talking about something in the period of about 4 days to 2 weeks, likely that kind of time period. In 4 days, the water in the reservoirs runs out. In 4 days, basically the shops stop working. The petrol at the petrol station doesn't work, doesn't come out anymore. You'd be in a very, very bad situation.
Zoom webinars don't work.
Yeah.
The internet won't work. You're not logging on to listen to us to discuss how it works. I mean,
solar and Starlink.
Yeah, solar and Starlink. And I mean, these are real discussions that we're having. Should we organize Starlink for answers? I mean, these are crazy discussions. So okay, so dangerous, but like I said, that's not one we nailed him down to. So he's given you kind of both sides of the question, but not really answered it. But yeah, scary stuff. Okay, will the war in the Ukraine end? So what do you think?
I think it probably won't end. The reason being is this, that we're going to have a major, battles at the start of 2023. I think by March to May, we're going to see like quite a big uptick. We're going to have, for instance, Ukrainians bring a lot of equipment online, both from what they took from the Russians as well as what they received from the Americans. This is in the news today. Apparently, they are being taken, hundreds of Ukrainian troops are being taken to US bases to be taught how to use some of their missile systems and so on. The Russians are going to bring hundreds of thousands of more soldiers onto the battlefield this year. So they are going to be like a serious upgrading in terms of both the sides of power. And I think that there will be some battles happening, but I don't think either side has the ability to have a knockout punch. And so long as there's the ability to see, some gain, the war will go on. Wars generally end when both sides are just tired of killing each other, or one side is just totally collapsed. And I think that neither of those is going to happen this year. So I don't think the war will end this year.
And it's a question I asked for earlier today. What do you think if Putin was to die? Does that end the war?
Possibly it does, but understand what Putin has done is he's gone out and he's removed almost all the naysayers. So the people that are around him right now and that would be taking over, even like for instance Medvedev, the guy that basically took over in the period where Putin wasn't running because of term limits in Russia, which is no longer a problem, has come out and being even more aggressive than Putin has with regards to the war. I mean, you look at some of the Russian propaganda out there, and it's crazy. There's questions whether or not Zelensky, the leader of the Ukrainians, is a demon. I'm not even joking. There's like I've seen that discussion happening on a Russian TV show, whether or not he's a demon, like getting help from the Satan or whatever. So yeah, the Russians are in a bit of a tailspin right now. But understand this: the Russians are always in a bit of a tailspin. Look at the number of Russians that they died in World War II, and they won that war. The Russians lost multiple more people than the Germans did, but they won that war. And right now, the Ukrainians are losing probably less soldiers than Russians are. But the overall death toll for Ukrainian soldiers plus civilians combined is significantly larger than what the Russians have lost. And the Russians have more people. So yeah, I do think that there'll be that part. The second part is that, the Ukrainians have access to unlimited weaponry, unlimited training, and unlimited support from the West. And I think that to a certain extent is going to continue. And that should mean that they will be unlikely to be taken over by the Russians, barring some unknown event.
Okay, great. Okay, let's move on to the economy. Okay, so the next question is: Will the U.S. consumer price come in lower than 4% next year? So we've got inflation moderating at the moment. We've got the inflation numbers out tomorrow, which I think we're expecting. I think they're expecting 6.1 in the headline number. Also expecting a dip in the core inflation numbers, which obviously strips out food and energy prices. What I'll call this year, will the consumer price inflation come in lower than 4%?
No, it won't. Look, I mean, we are going to have a few more months where inflation is going to be under a lot of pressure. Two major factors in the US inflation number is housing as well as medical expenses, medical insurance. And both those things have built-in headwinds. They're both going to be down for a few more months at least. We know this by looking at what the data has shown us for the last few months. So this is guaranteed that they're going to be lower. But that being said, we are going to probably see inflation return to the energy markets. I think there's been such discrepancies with what's happening with energy that we've had this oversupply and this crash come down. I think there's still factors out there that will make energy go higher. I do think that also we are likely to see some more supply chain issues coming through, is because the Chinese are having these issues around COVID, etc. And what's happened with regards to shipping, especially the shipping price has gone up crazy until last year, and then now I think it's come down quite dramatically. In fact, to a level that I think that might be causing losses for these companies. These are companies that ship stuff across the ocean, across land, and so on, which would cause more problems going forward. And why we put 4% is that we would need to see inflation come down to say 3 to 2% for the Federal Reserve theoretically to basically say, this is over, we can start cutting interest rates again. 4% is a bit higher than that. And so even though we do think that they might be raising interest rates later, we don't think it'll be justified entirely by the CPI.
Cutting interest rates.
Cutting interest rates later. But it won't be justified entirely by the prices. Prices will be lower, but they won't be enough to justify.
So I think we're building up a scenario where we're going to say we think the Fed is going to blink. Yeah. That's what we're looking at. Okay, will global GDP growth rates top 2% this year?
I don't think so. I think we will have a recession. I think there will still be issues in places like China. And look, the World Bank or IMF, I think one of the two came out with a thing dropping growth rates.
Yeah, it was World Bank.
Yeah, from 3% down to below 2%. I think that's likely to be the case. I think we are going to have a recession in the US and Europe. And I think the Chinese, despite what the fake numbers they put out there, is probably going to go through a bit of a recession as well, just because of the after effects of things, for instance, like the COVID situation, plus some of the trade war stuff that's happening between them and China and the US at the moment.
Okay. Will SA achieve a GDP growth rate of 2.5%?
No. I think we are going to be hamstrung again by the electricity price of electricity provision. Like I talked about, the possibility of level 8 is really, really troublesome. There's something I think that we need to really concern ourselves about. In the future, my assumption is that any profitable company will be able to justify having their own provision of electricity, their own solar, their own generators, whatever it may be. But right now, I think that's still going to be an issue with South Africa. And in the global environment, which is basically under pressure, we're not going to be growing too much faster than that.
Okay. And if you heard that rumble in the background there, that was the JSE generators turning on and kicking in as the power switches over. So will the US unemployment rate break 5%? Okay, so this I think is quite is it a big call?
Yeah, it's a big call.
It is a big call.
Like the US unemployment rate right now is 3.5%. It has been over 5% for quite some time. Our assumption about the year is that what will happen is that we will see the Fed, finally working with regards to its aim to increase unemployment. It's one of the things it's focusing on right now, which will probably overshoot like it normally does. I think unemployment will go through 5%, around about the same time we have the recession. In fact, it's one of the ways to define the recession, the fact that unemployment is increasing like we talk about. And I think that, that's probably going to be something that happens this year. Yeah. Just one thing about, one of the guys mentioned that electricity cannot fully shut down. It can't fully shut down, but it can basically, if there's like not enough supply in there, it can, you can destroy it. That's an issue, right? So that is something that can happen. So it's not exactly like, we're not using the right terms. We're not electricians, but what we've been warned by is a 4+ day weakening, or like the down system up to maybe 2 weeks, and that was what.
Where I suppose the levels don't apply anymore. Yeah. Where suddenly becomes, we're not at level 8, we're just broken. Yeah. Like when the naming conventions change.
Yeah, I mean, so we have collapses in places like, for instance, in the hurricane that hit. I think it was Costa Rica. They basically, or Puerto Rico. I think they basically had a collapse. So we have seen a couple of times, natural disasters and so on. It takes a long time to get them back on track.
Yeah. But back to US unemployment breaking 5%. I you know, we've seen no move. If you look at the non-farm payroll numbers that came out on Friday, I mean, the overall unemployment rate was expected to move to 3.7 from 3.6%. It moved to 3.5%.
3.5 is the best level.
Yeah, that is below what people used to consider frictional unemployment. It's a crazy strong labor market, and yet, you know, we had more jobs added. I think the headline number was expecting 200,000 jobs to be added. We got 223,000 jobs added. And the market rallied on the back of this. And the only reason that it rallied is really that we didn't see wage price inflation. We didn't see increasing wages as much as expected. So I think it came in at 0.3. It was expected to be 0.4. So yeah, the labor market has been weirdly strong in the US. But if you look at the corporate announcements, I mean, Goldman Sachs cutting jobs, Meta cutting jobs, Amazon cutting jobs, and shutting down warehouses.
Salesforce, which is one of the more woke companies out there that is all about we're a family and you all have a goal together and whatnot. They've cut people.
Yeah,
you know.
So and in the US, I mean, it's very easy. I mean, you guys know, no red tape. You just get rid of people, and the beauty is it protects the company so that when things get better, the company just rehires. So there's a far more fluid labor force as well. So the sticky nature of this low unemployment rate in the US is weird for me, and I think it's got to break as well. I agree with Viv there. I think we're going to see above 5% this year. Yes. Okay. Will China see GDP growth above 5%? Now, this is a difficult one because, like, which numbers are we going to believe? But I think we're not going to go with the Chinese numbers. We're going to go with, you know, international predictions. But do you think we're going to grow above 5%?
I don't think so. I think the Chinese are going to have a pretty tough year. Like I said, they have the COVID, you know, epidemic really picking up like massively in the country at the moment. Also, they are facing a lot of sanctions from, you know, the US, and that's going to affect their terms, for instance, their semiconductor production. They won't be able to import semiconductors. They won't be able to import equipment to make semiconductors. The US basically made a law that if you have US citizenship, either you put this Chinese semiconductor industry or you lose your citizenship. And so basically overnight, all like people with US citizenship, including people that were born in China, got trained in the US and, you know, had dual citizenship, basically quit and moved back out of the country. So that's been a huge low headwind to them. In addition to that, I think that some of their suppliers out of Europe are going to be in trouble. Yes, they haven't had a huge collapse of the European system because of the warmer winter, but we're still likely to see European industrial production under pressure, and the Europeans support or supply a lot of machinery that the Chinese need to operate their industrial base. So I think they're going to find it difficult to break 5% this year.
Okay, there we go. So that's a very solid no for next year's predictions. Okay, now we get on to currencies and fixed income. Will the Fed start to cut rates this year? Okay, will the Fed? Okay, so okay, let's put this in context. We had two Fed speakers out today. Both said not a chance. One, Raphael Bostic, says not even in 2024 are they going to be cutting rates. So 2 years of no rate cuts is kind of what the Fed is saying. Market isn't really listening to that because stocks are going higher. Why is the market not listening to that? And what is our prediction for will the Fed start to cut rates this year? I mean, we're still going up, let's face it. I mean, we got 25 basis points coming, pretty certain. I mean, there's like an 80% chance, according to Fed Fund Futures, get another 25 basis point up. I mean, both Fed speakers this week said terminal rate above 5%. I mean, we still got some way up. I mean, we're going to cut rates this year.
I think there's a strong possibility of that happening. Our model is, for instance, a recession, high unemployment, and with a US presidential election, as well as other elections next year, the Fed is going to be under pressure to start looking at rate cuts by the end of this year. The pivot is probably going to happen within 18 months. So we may be off by 6 months, so it could happen in the middle of next year. But, you know, it's probably going to happen sometime between the end of this year and the middle of next year. So we're trying to be a bit more aggressive by saying it's going to happen this year. I do think that, you know, the Fed, even when Volcker's Fed, they talked a tough game. But Volcker basically pushed that country into recession twice to curb inflation. And then inflation was significantly higher than what it is right now. Would inflation coming closer to 5%, maybe a little lower than that? Would unemployment rising to about 5%? Would the recession likely to happen this year? And with the presidential election the following year, the political pressure on the Reserve Bank of the US to basically pivot is going to be quite high. And I think they will, because they will be able to have an excuse to say, hey, look, we have done our job, it's coming down. Now it's time to basically try and get our growth rate a bit higher especially ahead of the election. You can't win an election if you're in a recession.
Okay, so that's a very bold call that we're making here. So we're going to say that the Fed will cut interest rates this year. I don't know. I'm worried about this call. I'll be honest. I think 18 months. My guess will be next. I think we're going to cut first quarter of 2024. But yeah, base case is the Fed's going to blink. So we think interest rates cutting probably December meeting. Yeah. December meeting. That's when we're going to say it.
Yeah, sooner than expected.
Okay.
Basically.
We're putting our heads on the block here. These are wild predictions. Okay. Okay. Will SARB start to cut rates this year? So we see it from the local reserve bank.
Look, if we don't have inflation really blowing out, like I don't think it should, and the SARB will look for an excuse. So they will probably follow what the US is doing if they can. So if the US cuts, they will likely look to do the same. Because that might be a bit of cover that they need to basically make the world a bit better. We've already seen, for instance, the government come out and talk about changing the SARB mandate to include more things than basically price stability and protect the currency. And so I think the Reserve Bank is going to be under pressure for a little while to try and, just appease the politicians.
Again, that's it. I mean, let's face it, our Reserve Bank has been it's an incredibly strong institution that hasn't bowed to political pressure for many years, and I think is stand up. But we're going to go. I think if the Fed cuts, our Reserve Bank will cut almost definitely. So, with the base case of a Fed cut, we're going to say it. I do think we're going to get these two wrong, to be honest. Yeah. But let's put it out there. Okay, yes, 2 cuts this year. Okay, will the rand end the year above 1778 against the US dollar? Like I said, the way that we chose 1778, we just took 17 and then added the differential between the interest rates. Currently, we're giving just over 7% on rand balances in a call account. In our dollar call accounts, I think we're getting 2.6, somewhere around there. So 2.6% on dollar accounts. So will the rand end the year above 1778?
I think if we're going to have level 8 load shedding, it's going to be difficult to us to keep below 18. I think with also some of the stuff that the Reserve Bank might be facing in terms of pressure from the government, our currency is more likely to weaken than not. We're going to have a bad year. It's going to be difficult, and holding below 18, I think, will be an achievement for the currency this year.
Yeah, and like I said earlier, this is a seasonally strong time for the currency. I mean, we've seen the currency. Yeah, I've seen all sorts of explanations about it. One of them was that it was from an RMB analyst that it's actually the importers. Typically import sector shuts down over this period, whereas the export sector doesn't. It creates a skew in the currency, just in the types of currency flows that come into South Africa, and that's why you get this strong currency. But with the kind of very, I suppose, aggressive load shedding, I mean, we've seen that have an impact on the currency in the past. I think that maybe is kept at an elevated level for now. But if that doesn't change anytime soon, which I don't think it's going to, I would say the risk is to the downside. So yeah, rand above 70, 78. Totally agree with that call. I think we're going to be above 18 by the end of the year. I think that's a very fair call. But yeah, currency always makes you look like a fool. So it'll probably be 12. but yeah, that's our call anyway. Will the USD again trade at parity with the euro? So I think we're at 107 at the moment. Yeah.
So understand this is a bigger call than talking about the rand going to 18. Firstly, the euro dollar is not as volatile as the rand dollar. And secondly, the percentage we're talking about here is a bigger percentage than what we're talking about with the rand movement. I do think that there's a significant chance the euro weakens again against the dollar. The Eurozone is by no means out of the woods with regards to the energy situation. They are going to face, they might face increased demand out of China. That's going to be good for some of their production. But at the same time, the production is going to be under pressure because energy costs are higher. They aren't getting the cheap energy they used to get from Russia. Now they have to import it from places in the Middle East as well as the US. They've got to basically compress it, cool it down, liquefy it, and then transport it, which adds a bunch of costs to the energy that they get. And I think that will reduce their industrial capacity to a certain extent and cause them to weaken. At the same time, any kind of downturn with regards to what's happening in the Ukrainian war will probably weaken the currency as well. And finally, we must point out the fact that, at the moment, what's happening in the world is that the Eurozone is really vulnerable. We've had a number of political issues this year. I think one of the big political issues that's starting the year off is the increase of the pension age in France to 64 years, which is likely to be followed by a lot of protests. The French love to protest any kind of move like this year. And that's obviously going to have an impact as well on the ability of the Eurozone area to act with any coordinated economic policy going forward.
Yeah, I suppose this is one of the biggest predictions that we've got. This is quite out there. Will the US, basically the USD JPY, so the US yen rate, trade above 145? Where are we at the moment? We're about
132,
133. Yeah, so that's a massive move out.
Yeah.
What could prompt a move like that?
Well, what you got to understand is that the Japanese have the worst demographic situation in the world. They have the worst debt situation in the world. They don't have enough young people, and they borrowed way too much money. And so what they've been unable to do in the recent period is they've been unable to basically raise interest rates to match what's happening in the rest of the world. And the reason for that is that they can't raise interest rates because their debt servicing will be too expensive. Now, even though we do think that the dollar is going to basically come under a bit of pressure because of the fact that we are going to see the US Fed start cutting rates this year, I think that what the Japanese have and what the vulnerabilities they have is beyond just the interest rate cycle and what's happening in the US and so on. I think that they have a real chance of a systematic problem causing their currency to weaken dramatically from here. And 145, I remember 132 to 145, it's like, more than 10%, or around about 10%. It's way bigger than basically what we're talking about the rand dollar, or even something the euro dollar. But I do think
it's way bigger than the interest differential.
Yeah, way bigger than interest differential as well. But I do think there's a significant chance that the yen has a very bad year, or at least part of the year is very bad.
So problems in Japan. That's kind of what we're thinking. Okay, onto the commodity markets. Okay, same question as last year. Will Brent crude go back above $100 a barrel? So we were 81 at the moment. Okay, what's going on the oil market at the moment? We've got the Ukraine's Western allies putting in caps at $60 a barrel. Russian oil is trading way below that if you look at their actual contracts, because they just don't have anyone to buy it. But they're now talking about price at least output cuts as well, between 5 and 7%. I mean, those are big output cuts. What do you reckon? We're going back above $100 a barrel? And what's the thesis behind it if we are?
Okay, firstly, China is back online, which is obviously going to increase demand. They're one of the biggest demanders of oil in the world. They will still buy the Russian oil. It's more difficult to get the oil to Russia from Russia to China than it is from Russia to elsewhere in the world, because it's just the difficulties in traveling and so on. And I think that particular market, oil from Russia to China, oil from Russia to India and the East, will still function because they won't need all those insurance and other kind of legal hoops that they have to follow going west. At the same time, I do think that we are seeing problems in places like Nigeria, and also we'll talk about that a bit later, could also affect oil production. These are big oil producers, and they will obviously make an important impact there. So I think the return of China, as well as some geopolitical issues, could easily push oil above $100 a barrel. At the same time, OPEC hasn't. So they might want to just keep things a little tighter for longer, just to establish a new psychological level for oil.
Okay, so that's a yes. We think oil above $100 a barrel again. So I think energy prices, we're quite constructive on energy prices. Energy prices remaining high for 2023. We don't think we're quite out of the woods yet. Maybe also that will help keep the inflation figures a little bit higher as well. Okay, will gold reach $2,000 per ounce?
I think it will. I think the fact that China's back in the market is kind of good for gold. Chinese love buying gold. Is a nice, it's almost a love trade. The Chinese and Indians buy a lot of gold, and I think that might be a bit of positives. I do think also, inflation might just have a bit of a whipsaw kind of effect. We might see inflation rise a little bit, not back to the highs, but but up again. Michael Burry is talking about this as well at the moment, that they have this bullwhip effect around inflation, where it might go down and come back up again, which will also be good for gold. And any kind of uncertainty in the world, like I said, is a positive for the yellow metal.
Yeah, but I think that's it. So Viv also mentioned the love trade. Just for those that don't know, there's the love trade and the fear trade when it comes to gold trading, and the fear trade is what typically people imagine. It's hedging. It's you buy gold because you're scared that someone's going to drop a nuke, and you're going to need to. Your financial system is going to collapse. You're not going to be able to access the money in your bank account. So you want to have a little bit of gold in your portfolio or in your safe, or wherever you keep it, that you can kind of stick in your pocket so that you can run with it. So that's kind of the fear trade. It hasn't really played out so far. I mean, markets have been under a lot of pressure. I think there's been, if you look at that CNN Fear and Greed Index, which is a composite of all sorts of different measures like the VIX, etc., which is this is essentially the Fear and Greed Index is what they call it. It's been a very scary time, and yet we haven't seen massive performance from gold. But I think that's because interest rates have been going up, and gold doesn't pay an interest rate, and it's easier to go and buy a US Treasury where you're at least going to get a little bit of interest on your money. So, but now I think, like you say, like if we see inflation, staying sticky and not coming down below that 4% level, and you see interest rates starting to come down, and you see that kind of difference between higher inflation but interest rates not rising as aggressively as we've seen them to meet it, definitely I think it probably will push gold higher there. So that's kind of like your fear trade. And then Viv mentioned the love trade. The love trade is like you buy gold because you want jewelry. You buy gold because you suddenly have more money than you've had. So it's generally when economies have growth within them, and more people are being brought into the middle class, for example, and then suddenly they're wanting to buy gold because there's just more consumers of gold. So that's kind of the love trade angle of it. Okay, number 16. Will platinum break above 1,200 an ounce? We said last year we said no, and we were right. This year we are saying
no again. I think
we're saying no. We're saying yes.
Oh, say yes.
We're saying yes. We're saying yes.
Okay, yeah. Look, I mean, the note that Russia is a huge producer of platinum. After the South Africans, we are the number 2 producer of platinum. They're number 2. We're the number 2 producer. We're the biggest producer. If we have issues with regards to load shedding, if they have issues with regards to the continuing war, we could see platinum basically supply from the mines being diminished. If we do see, for instance, China returning to the market, they will be demanding a lot of platinum for their engines because the way platinum works is diesel, more palladium. Petrol, smaller petrol, more platinum. Smaller petrol engines are more prevalent in China. So if they do have that, return to demand from China, it's going to demand platinum going up as well. And as well, I think some of the EV exposure is a bit overblown.
This is only a 1-year prediction.
Yeah.
So we do I think the whole adoption of EV, potentially could be a hockey stick. You're not going to, it's not going to be. I don't think adoption of EVs is going to be a straight line. But the question is it going to hockey stick this year?
Yeah.
And I tend to agree with it. I think maybe a little bit too soon still. And it'll be the same as oil when everyone was telling us, oil prices can go to zero because we don't need oil in the world anymore. We're going to have nuclear power and everything's going to be powered on batteries. And then suddenly you kind of realize you do need oil and you just haven't done enough investment. And then suddenly it's a real problem because there's a supply shortage. So, okay. And so platinum, okay, we are going to go, yes, it's going to break $1,200 an ounce. Okay, will Bitcoin trade about 25,000? Wow, a very different question to last year. Will it break 100,000? So will it break 25,000? We can see a recovery in Bitcoin, though?
I think we might see a recovery, but I don't think it'll get to 25,000 very easily. I still think there's more shoes to drop in terms of the fraud in the Bitcoin / crypto space at the moment. Some very big players out there have some really dodgy kind of things that they've said in the past that should indicate that there's problems with their liquidity or with their regulation. And they still are, out there in the market trading. These names, I'm not going to talk about them exactly, but I still think there's a great deal of danger left in that crypto space, especially around fraud, especially around, bad actors, quite frankly.
Okay. So we're going to say no. Bitcoin not going to break $25,000 per coin. Okay. Will the JSE All Share Index reach $85,000? So $85,000. Well, what did it read? 85,000 points.
Yes.
Yes.
I think there's a good chance of it happening, especially if we have the currency weaken. Remember, we have a lot of companies that are basically offshore based as well. But we have, for instance, some of the biggest players like Naspers, for instance, having a lot of exposure to China. And they've the recovery of Naspers from the last 2 months of last year was over 2/3. So basically over 65% in terms of recovery in 2 months from Naspers. I think we do see China basically come out and try to remove some of these restrictions. These are some incredibly powerful, incredibly profitable companies, and then we could see that helping us out. We're also likely to see our mining index doing a bit better because of the fact that we are likely to see a return of demand from China. So I think there's a possibility we can easily get above that 85,000, sorry, for the JSE also.
85,000, yeah. So 85,000 for the J. Yeah, last year we said no. This year, and I think the thesis here as well is that economies I think are going to do very badly this year because markets are predictors of economic activity, and I think we're going to see recessions. We're going to see the economic growth numbers coming down hard, but that doesn't mean that we're going to see that in financial market numbers. And I think with the market starting to look forward to rate cuts potentially. I mean, again, the Fed is not saying this, but if we do see it, I think markets can still do very, very well this year. And I think we're looking for a recovery. So will the S&P 500 end above 4,500?
Yeah, quite possible.
Okay.
We're talking about a 15%. That's twice the average market return on this index, basically. So it's an aggressive, assumption, but I think it's quite possible. I think the market, like Gary said, the market is forward-looking. If they think they're going to cut rates in the first quarter of 2024, they'll start raising stock prices in the first half or maybe in the middle year of 2023, because they would look forward to that, rate cut coming through and increasing prices. So I do think that we are going to see, because we're assuming that there will be rate cuts within 18 months, the market should be rising before that. So 4,500 is not.
Yeah, but yeah, I think it's important to understand this. We're making these questions difficult for ourselves because, that's double the market average. I mean, that's a long move. That's still a long way up from here. That'll be a great return from an equity portfolio for this year, and we think. It's we're not picking the market average and saying, will you do that? We're saying, will it do more than double? And we're going on the outside of that. So, it's a very aggressive call. And I mean, even if you think it's only going to do, half of that, it's still probably worth buying equities. Okay. Will the Euro stocks outperform the FTSE 100? So last year we asked the question around the economy. So we were asking around economic activity. This year we're asking around financial markets. So we've got to look at those two indices and kind of try and predict what, looking at those constituents, which one will do better.
Yeah, I think the FTSE will have a good year because of its focus on energy and then focus on miners and minerals and so on. And I think that will be one of the things that helped it out this year. I think the Euro stocks might still be under a bit of pressure just because of the after effects of trying to readjust from the Russia, gas situation. Remember, some big car manufacturers have come out, for instance, that they can't manufacture in the current environment because the cost of energy is just too high. There'll need to be a readjustment in terms of where things are produced around the world. I think for a little while longer, the Euro Stoxx 50 will be under a bit of pressure. I'm not saying they're going to be down negative. I just think the FTSE has more upside potential right now than the Euro Stoxx 50.
Yeah, a whole bunch of commodity stocks and a whole bunch of financial companies. Like, that sounds nice and defensive in a difficult environment. I agree. I think, no, it's not going to. I think FTSE 100 over Euro Stoxx this year round. Okay, so now to the big question. I know what you're going to say about this, but will the Nasdaq outperform the S&P 500?
Yes, okay. I think the Nasdaq companies have been under the greatest pressure because they are more of the tech companies, and we've seen some incredible falls, for instance, like companies like Amazon and so on. Not everyone is going to recover as easily. I don't think Netflix, I don't think Tesla are going to. So I think that in terms of what's happening with regards to, what's happening with regards to the tech sector, there's just more opportunity there for it to be going up because of lower interest rates. There's more growth opportunity, and when interest rates fall, growth outperforms value, and it's more towards the value end. So I think that we will see the Nasdaq outperform the S&P this year.
And I mean, value cycles can be very, very short as well. So I don't know if it's short enough. And again, maybe we're a little bit early on this, but I certainly think that the type of tech companies that you can buy here, I think you've got to be very selective. I don't think we're saying let's go buy Tesla. And we're talking Nasdaq, we're talking broad index here, but also the quality of some of those tech companies. I mean, these are not particularly expensive companies anymore that have enormous moats around them, that have just audiences that span the globe. I mean, we're looking at Tesla's monthly active users at the moment. I mean, it's Twitter, at least, not Tesla. Twitter's monthly active users. I mean, absolutely like off the charts. I mean, we're talking almost 500 million people. I mean, that's for a small so I suppose communications tech company. But it's not just communication tech. There's a lot of new modern tech that's coming through that could make that index very, very exciting. And I think we're going to talk about some AI stuff in a bit. So let's go to the company questions. Okay, so the first one is Twitter. Okay, so will Twitter become obsolete? And then I immediately had to say, what does that mean?
Yeah.
What is it? So we've defined it by saying, will they see a drop of more than 20% in monthly active users over the next year?
Yeah, so that has been a fear around Twitter, whether or not Elon Musk takeover would cause people to emigrate to, for instance, things like Mastodon and so on. Has not happened yet. People are lazy. One of the amazing things about this is like companies like Twitter and like Google and Facebook are built on the fact that people just don't want to change.
It's not even lazy. It's like also you built your audience on that social media platform. Now you're suddenly going to go, oh, well, guys, all follow me to Mastodon. And then, like, who's going to follow you? Like, you're a rebuild over there.
I think it's Mastodon, if you follow on the way the system works, is that you can take your Twitter followers along with you. Okay. So if you can't do like, Mastodon, you basically follow the people you followed if they're appearing on Twitter. Okay. And there's also these other things out there right now that are supposed to be Twitter killers. I don't think Twitter is going to become obsolete. I mean, things do become obsolete. This is not a case of, oh, we say 20%, like it's such a massive drop and that it can never happen. I mean, there used to be a thing called MySpace, and that has basically been destroyed. There used to be things that are very powerful that are gone away. And I think that, quite frankly, that Twitter, it's possible it could go away. But I think that what Elon Musk is doing is not, negative enough that we'll see that drop off. And in fact, some of the stuff he's doing might be positive enough that we'll continue to see an uptick. Remember, when he took over the company, there was a significant uptick in activity on the website or on the platform. And I think that is going to continue as long as it's an interesting place to go to, which is what he's trying to create it.
Mm-hmm. Okay, so backing Elon Musk there. So will Twitter become obsolete 2022? No, we're saying no. If anything, increase it. But no, we're not saying it's going to be an increase in monthly active users, just not a drop of more than 20%. Okay, next question. This is, of course, Viv has to have this one. Yeah. Viv has been punting Meta to me for ages. Okay, will Meta trade above $170 per share?
I think it's quite possible. Look, I punted it at like the low to mid 90s. Yeah. And I've been doing it on TV, Business Day TV, a number of times. I did for the company as well. The reason being is this. The business itself is incredibly, efficient, incredibly valuable. The reason Meta has fallen as much is because Mark Zuckerberg was putting an ungodly amount of money into building the metaverse. And what I mean an ungodly amount of money, to give you an idea, the only research technological project that came close in history to this is the moonshot from the US, the moon missions in the US. The creation of the iPhone is not even 1/4 of what he was planning to spend on this thing. The creation of the Boeing, airliner was a couple of years of his spending. He was planning to spend something like between $15 and $25 billion a year for a decade plus. We're talking about $250 billion in spending, and that's why we saw Meta under such pressure. When he got pushed back, what he's done is a couple of things, including reduce costs by letting go a lot of workers. If Meta basically is able to get rid of that cost of metaverse, or at least get it under control, maybe to $1 or $2 billion a year in terms of expenditure, the company could easily go up to back to $200 a share. And I think that's going to be something that we see this year.
Even split the company.
Yeah. So, yeah. But I don't think he will, because the metaverse is making no money. He's not going to be taking the
sure.
out. Yeah.
Sure. But give shareholders, different types of options to invest in the metaverse or not. Might release some value for shareholders, because I think that underlying audience, as you say, I mean, you look at the apps that Meta controls. I mean, you're talking Instagram, WhatsApp. I mean, it's not just the Facebook. It's kind of top 5 app store apps.
Yeah. And the users
by a long way.
The users are increasing still, increasing users, and they still, they have been hit by Apple and so on with regards to their targeted advertising. But I think that's something that they could still.
I suppose that's what you want to do that's what you want to do as a share picker, as a share investor. You want to find something that has incredible value, but is priced too cheaply, or there's an impediment that you can see that can be easily fixed to prompt that re-rating. You want that catalyst so that if this happens, this is where you see the recovery coming from. So I think, so we're saying yes, Meta will trade above $170 per share.
Yeah.
So Meta, nice stock pick for you guys over there. Will an AI company break 100 billion valuation? So I think we got the news. I mean, I don't know if you guys have used ChatGPT yet, or played with some of the stable diffusion stuff, it's absolutely incredible. The AI tech that we're seeing coming out in the last 6 months is absolutely mind-blowing. I think we've had Microsoft now making an offer for GPT chat.
Part of it. So basically, the other thing, I think they're taking about half the company and 75% of earnings until they basically cover their investment. But they're putting $10 billion down, valuing the company at close to $30 billion. And this is from almost zero, like 6 months ago. It's a very, very big turnaround. By the way, interesting point here. This is yet another company started by Elon Musk. OpenAI. He basically put in $10 million back in the day. He apparently still holds a stake in it, though he doesn't have control of the company anymore. And so if this does go through, he's making a couple of billion extra just from this. The AI stuff is now really taking off in a way that we did not see, a few years ago. And I said, when I first saw the iPhone, I thought it was magical. The way it worked, what it could do, and so on. It was amazing. Okay. When I look at ChatGPT and I look at DALL-E and I look at all the new things out there at the moment, it's magical. What DALL-E does, what ChatGPT does, it does not feel like something that you've been used to. If you have not played with this thing, go and play with it right now. These are free things to play with. You just gotta wait. Sometimes the system is down, but if you just basically fiddle around, you're gonna have a chance to get some kind of access to it. What they do and the way they do it just does not make sense intuitively from how it works. Because what this thing has done is that they've taken a whole bunch of data, they've built weightings for different things, different variables, and somehow by putting input through those weightings, you get an answer like a picture or an answer like a poem. The way that works just is incredible. I mean, intuitively, it's impossible for your mind to wrap around it, quite frankly. And so, I do think that 100 billion valuation is possible. Scoring it for this year is aggressive, but I do think that in the next couple of years, it's almost certainly we're going to see some of these companies hit 100 billion. Whether or not they'll all be working out, I doubt that. There will be several busts. There'll be like the pet.coms, there'll be like the first .com crash. But that being said, we are still going to be seeing the Amazons, the Googles being created right now. And these are the companies like Amazon, Google, which will be the dominant companies for the next, say, 20 years or so. And I think that's important to think about.
Yeah. Okay. So and I think AI, just incredibly exciting. And as soon as I suppose listed company investors can get a stake, we own Microsoft, and Microsoft will have a little stake in there. And but you can see it in all tech companies. It's just becoming so part of the way that it works. I'm still sitting on still sitting on a Samsung. I've always been sitting on a Samsung. It's always been ahead of Apple, but go and play with the AI functionality of just removing people. You take an image of a Coke bottle or a plant, and you just draw around and say remove, and the AI redraws it for you. The application of this stuff is absolutely incredible. So very exciting, and certainly a theme that we like, and places that we're going to be looking to deploy capital over the next little bit. And with I suppose the broad-based selling in the tech sector, I think you're going to be able to get some very interesting entry points into some very, very exciting businesses. Okay, last question. Will Binance survive? Yeah,
and I think probably no. The reason being is I look at what CZ has been giving interviews about and how he's talking, and it does not give me a lot of confidence in the way the company is managed, or basically his ability to run a very clean ship, quite frankly, and understand that he's the second richest guy in the world. Sam Bankman-Fried was the second richest guy in the world in the crypto space. And Binance is much larger than FTX was. So this is a big deal. I do think that we are seeing a kind of collapse of the crypto, use case at the moment. Maybe it was because a lot of these hustlers got into the business. A lot of these guys that were not like true believers in crypto got into it, and saw an opportunity to fleece people that didn't quite understand how the system worked, or how the investment or the case was for crypto. I think that's likely to be something we see carrying on this year.
Okay. Okay, so now we've got a couple of bonus questions, because I said, we did so well on our Black Swans last year, and we kind of got to the end and we were like, hey, haven't got any Black Swan questions. So Black Swan, a lot of these predictions have been, as I said, they're aggressive. They're meant to be difficult. So we've got these ones. So these are not going to be scored. So when we send around the link for you guys to complete your little survey to kind of decide what you think, these won't be these won't count for any score or anything like that, but just kind of questions that we're going to keep track of and have a look. Okay, so will we see a higher lethality COVID variant emerging?
Unfortunately, there's a possibility. I don't think it's a probability. The way I'd figure out in any of these black swans, if 1 or 3 comes out right, I'm winning. I've basically done well, because I'm looking at some unlikely events, some really significant events out there. Now, what's happening in China is that they've removed all these COVID restrictions. People are going out in the city, and basically, from what I gather, everyone's getting COVID. We're talking 10 million plus cases, new cases, infections a day. When COVID has that much opportunity to basically, or any disease has that much opportunity to basically spread out, the chance of more variants being created is vastly higher. The chance of mutations happening is just bigger, but there's just more opportunity. And it's quite possible that we'll see a high lethality COVID variant come out. We've already seen the higher towards infectious COVID variants coming out, variants that are like multiples more infectious than the previous variants have been, like Omicron and so on. And so we could easily see a higher lethality COVID variant come through. I'm not saying this is a probability, but it's a definite possibility to keep an eye on. If you get COVID coming in basically with a 2 or 3% death rate, which is significantly higher than the 0.5% or below that we see right now, and with the current infection rate, I mean, we would be talking tens of millions of people dying in the world because of the fact that it's so infectious, and even 1 in 30 people dying would be enough to cause massive death around the world.
Okay, I always thought that viruses don't tend to mutate this way, but maybe the way that the vaccine has been created, it potentially could be an effect. But yeah, will Nigeria require an economic bailout?
This is actually one of the more easier ones to put out there. I think this is more likely than not. So Nigeria, basically next to Ghana, already has required an IMF bailout for the 17th time in their history. I think Nigeria is also in trouble at the moment. What's happened is that these West African countries, along with other emerging markets as well, have borrowed a lot of money, especially in foreign currencies. When their currencies weaken, their debt burden just becomes ridiculous, unable to compete with regards to, or unable to actually achieve or service that debt, and requiring a default. The Nigerians are also already spending a majority of their funds just to basically on their debt at the moment. That's unsustainable longer term. So I do think that there's a significant chance Nigeria has an issue. And to understand the problem here is that Nigeria is a massive country, 200 million people. It's multiple times bigger than any of its neighbors. It's bigger than any other African country. Should we have an economic collapse like we saw in, for instance, Sri Lanka in Nigeria, the human suffering will be great, but also the disruptions you'll find through all of West Africa will be massive, because you'll find Nigerian refugees, economic refugees going to other places trying to see what they can do. And I think that's something to be concerned about.
Knock-on impact to South Africa?
Look, I mean, it would be the impact of Africa as well, because we do obviously have exposure to that, and we could see a knock-on effect of refugees around the continent. We could also, for instance, just see the normal contagion effect. Nigeria, South Africa, both in Africa, according to some guy in New York or something, it's the same thing. So it doesn't really matter. So probably Nigeria will be looked at negatively for South Africa.
No, and all the big basket funds, etc., they'll just look at it negatively. Okay, well, okay. So we've already talked about our bold call on the yen, but will Japan face a full-blown debt crisis? I mean, debt to GDP above 200%. It's mad how much they've borrowed. What's going to happen here? Markets seizing up?
Yeah, I think markets could seize up. And remember, this is a huge market. They have a disproportionately large amount of debt for their country, and they are the largest economy in the world. They aren't the Americans, they aren't the Chinese, but they are bigger than the Germans, for instance. Should we have a big blowout in Japan? It's a crisis that could easily cause problems around the world, because their debt would have links to other parts of the world, and it'll cause the kind of knock-on effects that we'd have seen, for instance, in the Lehman situation back in the day, but bigger. Again, this is not a guaranteed event, but I think it's something that could easily, I would think, occur. And like I said, the way these black swan events work out is that if I get one out of these 3 right, it's a long shot, and that's like me getting all of them right. That's as good as I would expect, 1 out of 3. And I think this is a possibility, not a probability, but a possibility this year.
Yeah, something to watch, and something that might make headlines this year, and you probably do need to keep an eye on. Yeah. Okay, so that takes us to the end of the questions, and now we're just going to quickly have a run through practical application, and then we're going to kind of just announce the prize. So yeah, okay. So the first, I suppose, the first active idea, it's kind of the theme that we've, I suppose, been exploring today is really developed markets versus emerging markets. So what are you looking here? You're looking offshore exposure versus SA exposure. We're just saying, buy dollars, man. We've got our currency prediction, but an offshore dollar deposit.
Yeah, look, I mean, a couple of things will come into play here. If you believe our predictions about load shedding, do this. If you believe our predictions about a recession, do this. This is the kind of like the kind of action you would take. You believe there's load shedding going to be a huge issue in this country. Your property in South Africa will be under pressure because the economy is under pressure. Your job or business will be under pressure. Your pension component could be under pressure in two ways. Firstly, the weaker economy. The second thing is that it's going to be very difficult for government to basically not look at prescribed assets where they take a portion of your pension and give it to Eskom as a loan. And that's a possibility. This is something that's been discussed a number of times in government. And if there is a serious downturn in Eskom's fortunes, that could be a possibility as well. And any kind of like normal cash you have in the bank as well is could be getting in trouble. Offshore, you talk about offshore deposits directly in dollars. You don't have to think about what you're buying. You just think the dollar is more valuable than the rand. It's going to be a winning asset over the next few years. When we to go there, offshore stock holdings is what we prefer you guys get into. Offshore property is also a possibility. I don't recommend property as much as stock holdings. The reason being is that property is, especially offshore holding of property at the moment, is becoming very politically unpopular around the world. And you're starting to find cases where international holders of property, for instance, someone from China holding property in London or Canada, are being treated worse than normal landowners or local landowners. And laws are being made to basically hurt them. So I'd be preferring going towards either having dollar deposits or hard currency deposits. And quite frankly, dollar is the hard currency I prefer, or offshore stock holdings. And those are the two ways to go about it. That's if you believe our assumption about either load shedding or about the recession.
Yeah. So the next one. Okay, so this I kind of shared this with you last year. It's a little mini ETF portfolio. You can build it yourself locally. You don't need to take money offshore to do it. So this we're kind of talking about, like, I suppose, the tech recovery theme to an extent as well. So we've got the Signia iTrix, or at least the fourth industrial revolution ETF in there. That's boosted up at about a 15% weighting, just to kind of add a little bit extra tech exposure for you in the ETF, the broad basket ETF portfolio. We're currently sitting, this is actually the model weighting that we use in our tax-free savings accounts, for example. And it's, I think it's a good, those are 4 or at least 5 very good quality local ETFs if you're looking to build a diversified local ETF portfolio directly in a stock account. We've got the weightings up there for you as well, as you can see. So we have a global property ETF inside there, run by CoreShares. We've got it at 8.7%, so it is actually the smallest holding in the portfolio overall, but it's just to give us a little bit of asset class diversification. I tend to agree with Viv. Offshore property ETF, I mean, it is looking at things like warehousing, and it's not typically looking at residential property. It's looking more at industrial, commercial, retail, etc. But I think with high interest rates, I mean, the high interest rate environment that we're sitting at the moment, the Europeans, the Americans, they're not used to this level of debt servicing. So, you've got to see property markets under pressure. So smaller weighting there, but asset class diversification coming in. A component in emerging markets sitting at around 10%. Again, following our more DM theme than EM theme this year. Still think that we've got, emerging markets are going to be tough. I feel like the world is closing borders. Like if you're a rich economy, you're protecting yourself at the moment, and that's kind of where you want to be investing in those types of economies and people. And of course, the bulk of it's still made up by that Signia iTrix S&P 500 ETF. Just be careful. There are 2. There's the SIG 500 and the SIG US. You want the SIG 500. It's got a much lower total expense ratio than the SIG US. And that obviously making up the bulk of our portfolio, which is the 43%. Yeah.
Just understand the assumption you'd be believing us here is that interest rates are going to be coming down a little sooner than expected. If interest rates come down a bit sooner than expected, equity like this, even the property, would be positive. So it's not about load shedding. It's not about basically recession. It's about what is happening in interest rates. If you think they're coming down like we think a little earlier than expected, a great thing to get into.
Yeah, and super low cost and kind of great. Okay, then obviously IDT Tier 3, we've got 2 managed portfolios for you. So obviously the global equity portfolio, very much within the equity theme. So I've just stuck up our top holdings, our kind of historic performance. I mean, we had a tough year last year. Like, I mean, a lot of guys did. Our predictions might have been good in the overall, but unfortunately, falling markets are falling markets, and we did slightly underperform our benchmark. We're out by about 1%, but nothing that I'm overly concerned about. Markets are down, we're down. It's what happens within equity portfolios. Longer term, we've been running this portfolio since 2016. We're still comfortably ahead of our benchmark since inception. Ahead over 5 years, ahead over 3 years. It was a very difficult year, but you can see the kind of top 5 holdings. This is just a portfolio of at the moment sitting on 26 really high quality blue chip stocks. Biggest holding in the portfolio is Visa, followed by United Health, Lockheed Martin, JP Morgan, and Nike. Really just kind of our flagship portfolio. Buying good quality stocks, really nice for offshore trusts as well. Something that you can buy and kind of work within. So that's the global equity portfolio that I run. Then we've also got the local portfolio. So the local portfolio, we actually had very little interest in the local portfolio for a long time until last year we started seeing demand and we launched it officially again in February last year. So it's now got just about last year, 2 years ago. Sorry, 2 years ago February. I'm still sitting in December, unfortunately. It was 2 years ago. So it was we launched it. So we got about 2 years track record on the portfolio at the end of this month. And as you can see, we're about 6% ahead of the market. We've also beefed up our research capability locally as well with the guys like Anthony. It's not a complex portfolio that we're running. I mean, we obviously know these companies really well. We kind of interact with them on a daily basis. And I think where the real demand came from is we can run it within Regulation 28 products. So you can put these in your RA, that kind of stuff. Biggest holding in the portfolio at the moment is Richemont. That's just because of, I suppose, the growth. We've also got a decent chunk of Sasol. BHP FirstRand is our preferred bank. It's in there. We've actually just put in Standard. We put in Standard Bank about 2-3 months ago. We've had a beautiful run up on Standard Bank. So a little bit heavy in financials. We'll probably be down weighting that slightly, but great portfolio. So it's got kind of that big offshore feel. So it's got the likes of the Richemont, the kind of the Rand hedge companies. It's got some of the kind of miners, which are just so easy to access through the local exchange. And you don't need to go and buy miners with your offshore allowance. Like buy miners locally, that's fine. And of course we've got Anthony Clark. So we've got a whole component within the portfolio that follows kind of like the more small and medium cap stuff, looking for a little bit of alpha. He's got his presentation for his 5 to buy on the 18th. So that's, I believe, next week, Wednesday. Really worth watching. So if you haven't registered for that one, he's a lot quicker than us because we've been going for almost an hour and a half now. So he's going to cover his 5 to buy from last year. He's going to give you a rundown of what happened, and he's going to reveal his 5 to buy for this year as well. So and kind of talk you through his kind of thesis around why he's owning them. Fantastic analyst, really worth a listen. So those are the ideas. Then last year we also did an internal stock picking competition, and kind of I think the comment around there was like, hey guys, like if you want a nice diversified portfolio that you just want to kind of go and stick in, and I mean we often get you often get a little bit of flack that, you guys are always picking offshore stocks. So I said, okay, we're only picking local stocks. So these were everyone in the company picking local stocks. So Christo was our stock picker. So it was him and Werner always got competition. So Werner came third overall as the third best broker in the country in the individual award. Christo came sixth. So which is great because it's well over 100 people participating in that. So it's a very, very high ranking that they both achieved. But this Christo well outperformed Werner in his stock picking. Standard Bank, Shoprite, Anglo American were his picks. This is all based on total return. I've taken it from the day before the presentation to close of business yesterday. But nice to see that most of the company positive and nicely positive in a year that has been incredibly difficult. Obviously, once you kind of add rands onto the dollar, any dollar performance doesn't look as good. And when you take this back to dollars, it's going to be flattish as well. But in rand terms, a fantastic performance. Most people well ahead of the interest rate, which is very, very good for 2022. Let me tell you that. So I've done it again this year. So we've all given our we've all given our picks in. So those are the picks, and yeah, we'll share the slides afterward. But yeah, so those are the picks. Nice little portfolio if you're looking to build it. This year we've done a mix of local and offshore, and yeah, that's kind of the picks. A couple of ideas for you. And then finally, if you are interested in getting an account with us, really simple. You just go to Answers/account, hit the button or the kind of account you want, apply, send us your fee, find the account be open. So if you enjoy it, go and fill in a contact form. Let's have a chat. Come and join Answers. Our client base is very happy. So it's something that you should do. Okay, finally, so we've got a couple of questions and then we'll do prize giving. Okay, no, we don't. This was just a thanks.
Question: why do we not do the NASDAQ rather than, for instance, something else in the ETF portfolio? Look, I mean, what you must understand about this particular thing here, we're not. This is our ideas, but we're not trading exactly according to this. We are a lot more conservative than some of the ideas we're giving here. You know what I mean? All going all out in tech. It's pretty aggressive. The ETF portfolio is meant for a tax-free savings account, which we don't try and change too much. It's meant to be a longer-term thing. So having the S&P 500 in there over that period is usually like a reasonable thing. It's one of the reasons we still have a property portfolio part to it, even though we don't like property as much at the moment. It's just that it's meant to be a more of a a good idea as to how you invest your money in a reasonably moderate manner. Aggressively, I'd probably be switching out some of the stuff for the NASDAQ. You're correct, especially the property for NASDAQ.
No, and that's it. Yeah, I mean, and just to this point around the NASDAQ as well. I mean, we were looking at doing a potential NASDAQ structure for you guys today as well. Just say, okay, if you want NASDAQ exposure, here's something interesting. So, I mean, I did price one up just before the presentation. So I think they gave us, it was 118% upside on the structure, uncapped growth note with a 10% downside protection, where you can just basically get uncapped NASDAQ growth. I mean, there's a couple of issues with that. So we, I've kind of floated that idea with guys over a 5-year product before. There hasn't been a huge interest for it, but yeah, I think we're very constructive on NASDAQ. So I mean, to put NASDAQ into a portfolio, to switch out a portion of that. Like I said, these are just, like Viv says, these are just ideas. So what we do with the underlying, if you want to switch into NASDAQ, just a little bit of more aggressive stance, but I don't think there's anything wrong with that.
But understand that we don't exactly follow this process. Like we don't go all into, we have a bit more of a diversified approach. We do obviously take these ideas into account, and that gives us like a slightly better thing. But obviously, with dealing with other people's money, you have to be a bit more careful. That's just the way we go.
No, 100%. Yeah, that's it. We can't just you can't bet the farm on the fact that that Ukraine is going to invade Russia. Like I said, it's
Russia invaded Ukraine.
Or at least maybe that's this year.
That's true.
Maybe that's the outside chance. It's going to be a turnaround. But yeah, so it is. It's kind of best ideas, and a lot of these picks and these ideas are a lot more aggressive than what we do naturally. But that's what it's there for. So finally, prize giving. What you got right and what you got right and what you got wrong. Yeah, so these are the 2022 questions. So these are the 2022 questions. And the winner was DJ Elliott. Congratulations. I'll get your little prize.
Here you go, President DJ.
Yeah, so we'll get in contact.
I sincerely hope you're not diabetic.
We got a little prize for you. So let's just have a look. So it was kind of, it's a whole bunch of Lindt chocolate, but you'll see we've done it kind of in the theme of the year. So there's a little bear market bear in there for you, with a whole lot of chocolate around it. So enjoy. It's the bear market prize this year, because it's been a bear market and it's been really tough. So yeah, thanks everyone. Thank you for everyone. If there are any questions, we will stick around, but I think we've answered most of them as we've gone along.
Or email us. You have our email details.
You've got our email address. Fill in a contact us form on the website and say, hey, come talk to us. Sorry, there are a couple of other questions. Drop some names of AI companies that you mentioned. I don't know, like AI companies.
A lot of things are not listed. I mean,
so it's too new. Like that's the thing. So like I said, Microsoft's buying into chat, into OpenAI, but like it's yeah, like I said, like we've got to, there's a lot of companies that are already using the technology, but it's, I don't know, like we draw up a short list and send
there's
it
things that,
around as well.
that they do have a approach. I mean, for instance, Tesla, if you look at the valuation, that's probably an AI company, just in that valuation, because it's definitely not valued like a car company.
Yeah.
If it's valued like a car company, Tesla would be worth 1/5 of what it is right now, even after falling basically 70+%. So understand that that's the Tesla is an AI company. There's a couple other things out there as well that we should look at from an AI point of view. But something like, for instance, OpenAI, not listed. They were worth literally almost zero, like a year ago. A few hundred million.
Yeah, I think most of the pure AI companies will probably be coming to market in the next couple of years.
And stuff is like not there.
I mean, IBM, it's got Watson inside it as well. So IBM is an interesting one. Specifically used in the medical space as well as the huge application for the AI. The AI tech. So IBM, Tesla, maybe definitely Microsoft, definitely Google as well. I mean, Google has like through their
DeepMind.
And their moonshots department. I mean, they're always in there as well. So it's the typical big tech companies. But I mean, like I'll have a look around. There won't be kind of like it's none that come to mind as like super small cap. But also, we don't really play in the super small cap US space. But let's see what we can come up with for you as well. Yeah. Cool. Yeah, I think those are the questions. Otherwise, hit us up in.
We probably will be available on the YouTube channel. That's Rand Swiss. That's the name of the YouTube channel. Just search Rand Swiss in YouTube. Yeah. And it'll be up, I think, probably by tomorrow.
URL is just youtube.com/Rand Swiss. And you should see this up in the next day or so. So thank you, everyone, for listening. I hope you found it valuable. And thank you and good night.